Most traders get wrecked because they mark every single fair value gap and pray it works. That's why you keep losing. Today, I will show you in 5 minutes how to filter fair value gaps using break of structure and other blocks, so you know which one actually matters. An FVG or fair value gap is just an imbalance, a gap where price didn't trade. Think of it as an unfinished order, but not every gap matters. That's the trap. We only care about the fair value gap that comes with break of structure. In this scenario, we have the break of structure. Here is the rule. Wait for break of structure. Price must break a high or low first, then only look for the fair value gap in the leg that broke structure. Example, if price breaks a low, break of structure down, the valid fair value gap is from the swing high that caused the break. That's your bearish order block. So simply what I mean is you have a two fair value gap. Which one should you pick? Obviously, you pick the one that's attached to order block. Here is the filter. Price breaks down, you trust the fair value gap closest to the order block in the leg that broke low. Ignore random gaps in the middle of nowhere. The logic is the move that broke structure had smart money behind it. That's the fair value gap you trade. Let me show you a recent example. Don't mind these boxes, Asian box, etc. Focus with me. After London Open, first thing we will do on 15 minutes is scout our break of structure. See here, price broke this low. Break of structure confirmed. Now from this high that made the break, here's the fair value gap and here is the order block. This is our order block and this is our higher probability fair value gap. Price pulls back, taps fair value gap, drops clean. That's the one you want. Simple. Now let's go to 1 minute and look for an entry of fair value gap again. Now we are at 1 minute. Let's mark our break of structure. Now we have our break of structure and this is our recent order block that caused this break of structure. So we mark the fair value gap below it. Entry would be at the tip of the fair value gap, set limit order there, stop loss above the order block, and take profit would be the 15-minute low. As you can see, this fair value gap is high probability and it is a strong strategy. Let's go for another example. We have here our break of structure. This is our order block and this is our fair value gap. Just to be clear, this whole zone is an order block. This one is bearish order block. After mitigation, we go to 1 minute. Our recent break of structure happened here. So our recent fair value gap should be below this order block. So we set limit order here. Stop loss, let's cover the whole zone. And take profit, we will set it at the 15-minute low. As you can see, this fair value gap strategy is very easy to follow and you can trade this way any session. 15 minutes your bias, fair value gap bias, and 1 minute your entry. You target 1 to 3 or the low or the high of the 15-minute leg. Stop trading every gap you see. Wait for break of structure. Use the fair value gap from the leg that made the break. That's how you filter noise and catch clean moves. If you want more breakdowns like this, check the link in description and join my mentorship. I'll show you step by step how to trade with rules, not luck.